So let me go ahead and kick this meeting off. First of all, I hope everyone is doing well, that you're all safe and healthy, and welcome to this presentation from the Los Angeles Area Chamber of Commerce. As we get into a topic about the CARES Act and its early adoption now and the implications related to the work that has been done for what seems like a couple of weeks now. We have some really great speakers that are going to be talking to us about some of those implications and the early learnings and the lessons learned. And we're just very happy to bring this program forward from our policy team at the Los Angeles Chamber. So with that, I'm going to go ahead and pass it over to Patricia Torres-Bruno, who is the Chief Policy Officer at the Los Angeles Chamber. She's new to our team, and I'm happy to welcome her in this particular virtual forum. So pass it right over to you, Patricia.
Hi, Maria. Thank you so much. Yes, I'm the new Chief of Policy Officer for the Los Angeles Chamber of Commerce. But before we get started, I did want to go through some business in terms of questions. Can you go to the next slide? Okay, so this is our agenda for today. We'll be doing panel introductions, and then we'll have the CARES Act panel discussion, and then at the end we'll have Q&A. In terms of announcements, we'll have participants on mute to prevent background noise. Please use the chat box for questions, and the Chamber team will be monitoring the chat, and we'll unmute those that are providing questions. So please use the chat function to provide your questions. Thank you very much. And so I think with that, let's go on to the next, my piece. So thank you everybody for joining us today. And like Maria said, I hope everyone is staying healthy and safe during this COVID-19 pandemic. In Los Angeles County, there are 235,000 businesses, and 1,400 of those companies are members, making us the largest chamber in the nation. This also means that we have significant responsibility to look after the business community in Los Angeles. We must be the loud voice that is leading in bold policy, solutions, and advocacy. Today, I'm honored to be joined by three panelists that are working literally in the trenches when it comes to economic policy and business advocacy. First, I would like to introduce Justin Chardon, who is California Senator Dianne Feinstein's lead economic policy advisor in Washington, D.C.
Hi, thanks for giving me an opportunity to wear a tie.
Thank you. Thank you. Next, I would like to introduce Xiomara Peña, who is the California Program Director and National Latino Entrepreneurship Director of Small Business Majority.
Hi,
Xiomara. Okay, go ahead.
Thank you for inviting us to participate on this very timely discussion.
Thank you. Finally, I would like to introduce Jennings Imel, who is the Executive Director of the Western Regional Office, Congressional and Public Affairs Division of the U.S. Chamber of Commerce.
Great. Thank you, Patricia, Maria, Diana, and team. Happy to be here.
Thank you. Okay, so now I'll begin by applauding our governor and the city and county officials for taking significant measures such as the stay-at-home orders to deter the spread of the coronavirus. A major consequence has been the crippling of our local, state, and national economy. Many of our businesses are completely shut down and generating zero revenues. They have laid off employees. The business community, large and small, is struggling to survive through this COVID-19 pandemic. The Chamber is actively advocating for relief for businesses in Los Angeles that have been impacted. We were encouraged to have our congressional leaders and the White House adopt the CARES Act that established the Paycheck Protection Program, which offers loans through banks, and updated the Economic Injury Disaster Loan, or EIDL, which is administered by the Small Business Administration. Since the implementation of the PPP and EIDL, we have heard from our members the challenges experienced by small businesses, particularly those that lack traditional banking relationships. We have also received concerns from businesses that they're not eligible to apply for PPP because the banking institutions set criteria, including possessing existing lines of credit or existing loans, creating additional barriers for small businesses. Many of these small businesses serve immigrant and disadvantaged communities, what we call the underbanked or under-resourced. We can expect that our congressional leadership will continue to consider additional relief and recovery bills. So, we are thinking, what are the shortfalls and what can we do as advocates for the business community? I will begin my questions to the panel. I will direct the first question to each participant. Now, from your organization's perspective, what are the benefits of the CARES Act for your stakeholders, and what do you see as the biggest shortfalls? Justin, why don't we start with you?
Sure, and I'll talk more about, to start with anyway, about what I think was behind these packages that we passed. One of them is in the process of being passed, we hope, and a follow-up to the CARES Act, and allude a little bit to some of the gaps that we see. I think the main thing to keep in mind, that I try to keep in mind with the CARES Act, was that it is a powerful response right out of the gate on this crisis. When we had the 2008 Great Recession, it built throughout 2008. It really started crashing in September of that year. And we passed a stimulus bill not until February the following year, even though there were some earlier actions before that. The bill, the CARES Act that we passed in late March, was almost 3 times as large as the Recovery Act in February of 29. And so I think, even though that is not the last word on what Congress is going to do in this area, it was a significant move. I think the biggest part of it, probably, that will be most effective, and we're seeing some of that so far, is the combination of the small business lending programs combined with unemployment insurance that was augmented and extended. These are, it's a powerful combination to get money to businesses and the people who need it to keep the economy moving, while trying to minimize severing the employee-employer relationship. That's something new here too. In previous crises, really, a lot of the money has gone to people who are laid off in unemployment insurance, and that makes a lot of sense. But in this case, I think there's this understanding that a lot of employers they're being forced to close. Normally, in normal conditions, they would be doing fine. And it's difficult, if you have to lay people off, to rehire them. So the small business lending program, particularly the Paycheck Protection Program that you mentioned, is all about giving money that is forgivable, turns into a grant essentially for companies that keep people on payroll. So it doesn't work for everybody, but I think in a lot of cases it does. You also mentioned economic injury disaster loans. It's a smaller amount that goes to those, but it's another avenue that allows small businesses to benefit in ways that they would during a typical disaster. We've had definitely some problems with the rollout of the Paycheck Protection Program, and we'll get into some of those later too. But I think we should keep in mind that in 14 days, the SBA lent out as much money through this program as they typically do in 14 years. So it is a lot to set up the program in such a quick time, and you expect some problems, but they do need to be addressed. And then, as I mentioned, there's another $250 to $300 billion for unemployment insurance that covers the full income for a typical worker. And that's going to both, it helps on the public health side, because it means people who otherwise would feel like I have to go to work to support my family don't have that incentive, and that helps with not spreading the disease. And it also helps stimulate the economy to some degree. There are a few additional provisions for businesses. You have deferral of payroll taxes until 2021 and 2022. You have the employee retention tax credit that helps pay for employee salaries for those who don't qualify for a PPP loan. And you have a number of tax provisions such as net operating loss carryovers. And then finally, I'll mention the aid to state and local governments, which I think is really tied up in helping the business community as well, because the more that state and local governments have to cut services or do something else to balance their budgets, the more difficulty that we're going to have more people laid off, and the critical services that people need are under threat to be cut as well. So not enough flexibility in that, not enough money put into that so far, but I think it was a good first step. So I think that's where we are right now.
Thank you. Xiomara, do you want to follow his response?
Sure. So, and again, thank you so much for inviting us to participate. Our organization really works in 3 prongs: research, advocacy, and education. And so I want to start off by just acknowledging the progress that we have been able to see happen through the passing of the CARE Act and now this additional allocation of dollars, but also recognize that there are still significant gaps that exist that we're hearing directly from the small business community that maybe is fearful. They they didn't receive funding in this first round, but are looking potentially to be able to receive funding in the next round. What we can say about the CARES Act is, it was a really great first step. Yes, small business owners needed immediate cash relief. That was one thing that our research found, that small businesses nationally and then here in California were very supportive of the EIDL loan advance feature that was passed and included in the CARE Act. Another thing that I think was meaningful to businesses, and particularly when we're talking about the underbanked small businesses that maybe don't have the resources, good accountant relationship, or themselves micro businesses which here in California account for 92% of all business structures, but yet create 2 out of every 3 jobs. One of the biggest supports that we saw as part of the CARE Act was $240 million allocated to the Small Business Development Center Network, the Women's Business Center Network, other technical assistance providers that also work hand in hand to ensure that as these federal programs become available, that the most vulnerable communities have the tools to be able to work hand in hand, gain the technical assistance that they need to ultimately be able to submit for, one of these packages. Nevertheless, one of the things that we were very concerned about with the last package was just an understanding of the demand. To Justin's point, the SBA underwrote about 14 years worth of applications within 14 days. The Payroll Protection Program was a completely untested program that in the past, it was a completely new program. So new regulations had to be set up for it. Some regulations were distributed the day before the application was made available, second interim regulations. And so I think that this contributed to the lack of clarity and some of the access points that we needed to have for especially minority communities. Here in the city of Los Angeles, we have a very robust small business ecosystem made up of very established businesses, new startups. Some of them maybe didn't have banking relationships, which maybe also contributed to a challenge when you're thinking through an untested program that is leveraging a good infrastructure. The SBA 7A approved lender system was absolutely a really great tool and mechanism to be able to identify those intermediaries to process these loans. But I think it did lead to some of these loopholes that we did see, where we have, many of us have already read the articles about some of these large public traded companies, over 100 that we know of, that were able to tap into some of these funds really designed to meet the needs of small business owners to keep staff on payroll. And so, this is a good first step. This next package and allocation of dollars is another great step, but nevertheless, small businesses are the backbone of our economy. Many of us that are working for this population are seeing the daily and hearing the daily stories of impacts of folks that are really just struggling to make ends meet, and wanting to support their staff as well in this process. And so, there's still a lot of work to be done.
Okay, Jennings.
Great, thanks, Patricia. Yeah, I'd agree with a lot of what was already said, and echo certainly a lot of the sentiments. It was obviously something that needed to happen, and it was a great first step, as Xiomara mentioned, even though it's not obviously perfect, and we didn't expect it to be perfect, just given the size of this bill. It's a $2.2 trillion bill put together in less than 2 weeks. And then to get the amount of money that we're talking about to be able to provide the liquidity that the economy required, that businesses required, it was bound to have problems. And I think that even Congress understood that too. You've heard statements from Senator Rubio, who kind of played an integral, part in putting this together, that with the PPP program and things like that, that sure, there were bound to be some issues, but I think that the consensus was that those things could be addressed later. The most important thing at the time was to get the money out as soon as possible. And I think that Congress really stepped up and did a great job to be able to do that and get the CARES Act passed and into law on March 27th. A lot of good stuff was in it. The PPP program in particular, $350 billion program, really provides a lifeline for a lot of small businesses to keep folks on payroll. And as Justin mentioned, that was the whole point. And that's why you have the requirements that you have with the PPP program, with spending it on payroll and rent and interest on mortgage, and 75% needs to be spent on payroll in order to have it forgiven. It's really aimed at that, keeping employees tied to their employers and kind of reducing the amount of people that are going to need to apply for unemployment and stressing state unemployment systems. Even though we're already seeing that happen, I think it could be, no doubt would have been much worse had we not had the PPP program in place. So it's helpful. It's been helpful for a lot of businesses. Certainly not perfect, but it has been good. The EIDL program as well has been very popular. I know that there's been a lot of issues with that, and a lot of it just has to do with, quite frankly, the limited bandwidth that the SBA has. They're not used to, pumping out the amount of money that they had to pump out for this program. And I know that there was a lot of frustration too with kind of the way that it was promoted and the amount that folks would be able to get with that program and the $10,000 cash advance grant, things like that. Unfortunately, the SBA just kind of ran out of money for the EIDL program. And so I know folks were disappointed to see that the lag times and hearing back from the SBA 4, 5, 6 weeks, things like that. But I know that they're working hard. It's kind of to be expected, just given the scope of the economic calamity kind of that we've seen, and what the SBA has been tasked with. Very difficult, obviously. So understand that there have been a lot of frustrations with that program, but that's been helpful to be out there. Also, as Justin mentioned, some things that are kind of overlooked: the deferment of payroll taxes, the employee retention tax credit. That's available for folks that aren't able to get access to a PPP loan or haven't been able to do so already. They can take advantage of those programs that are out there. That should be really helpful to keep not only employees on payroll, but also to help with liquidity issues as well for employers. So a lot of good stuff in there, but understanding that, to Gilmaro's point, there are a lot of businesses that were shut out of the process that didn't get their applications in on time, or, because they didn't have a lending relationship, they weren't able to take advantage. And quite frankly, even small businesses that did have lending relationships sometimes weren't able to get in. And a lot of that has to do with the fact that the program ran out of money so quickly. I mean, I think that caught everybody off guard. Congress, when they put this program together, they were not anticipating that $350 billion would vanish or go out the door within a week and a half, essentially. And that's what happened, or 2 weeks. So I think that obviously has been a problem, and we're happy to see that Congress is taking the steps to address that. The Senate passed, the phase 3.5 bill, quote unquote, on Tuesday, and then the House, of course, is kind of positioned to do that today and to vote on that today. But yeah, that's been a problem. The businesses that haven't been able to get access, for sure. Some of those EIDL issues that I mentioned, and then quite frankly, from our perspective, and this is something that we continue to push very hard on, is we feel that C6s and nonprofits should also be included for PPP assistance. 501c3 nonprofits were included in the original CARES Act, and so we'd like to see that expanded to C6s and to other nonprofits, and especially because C6s, which are chambers of commerce and other trade associations, have really become so important and are playing such a critical role now, more so than ever, quite frankly, around the country. Businesses, in virtually every community right now are looking to their local chamber to do these webinars and to provide the resources that they need to be able to navigate PPP, EIDL, and kind of figure out what to do next. So chambers have really stepped up, and we'd like to see them get the assistance that they need to stay alive. So overall, though, been a very good program. Certainly some issues that need to be worked out, but it's been a much needed lifeline.
Yeah, so definitely a first step, but definitely additional work required, especially for the small business. So Justin, let me direct my first question to you. In the first round of funding, we heard from many small businesses that they were not eligible for PPP because they did not utilize traditional banking. The underbanked does not have access as we just talked about, to financial products provided by banking institutions. How does the new round of funding under the CARES Act address the underbanked?
So if you're talking about the package that's this House hopefully is voting on today, it doesn't address that, except for there's one significant feature, which is that it provides $310 billion more to the payroll protection or Paycheck Protection Program, and then $60 billion of that is set aside specifically for banks of $50 billion in assets or below, and that's most banks, but by dollar volume, it's a less significant share. Half of that 60 billion, 30 billion is set aside for very small banks under 10 billion in assets. That's a lot of minority development financial institutions, community development financial institutions. So it will help in that respect to make sure that some of the money goes through those. And as you said, there have been some problems in that area, and it's a big problem in California. I think there are a fair number of unbanked people. And what we've seen, as you alluded to, is that people that had banking relationships, existing relationships, were the first ones served. And that runs against what the program was intended to do, that both what the legislation said and what the federal government and the people or the agencies running it said they would do, which is make it first come, first serve and give everybody equal access to the program. That hasn't happened yet. It has gone to a lot of businesses that need it, but I think the underbanked area is one where we've seen the most issues. And so, and to some extent, this shouldn't be surprising because this is what we see in daily life. I think everybody on here knows that people who have a lot of wealth will get faster service at a bank. So we're seeing that again here as well. And while we may say that's okay in normal times, it is less so during a crisis. The senator was one of a number of senators and representatives who sent a letter to the Treasury and the Small Business Administration demanding that we have enough reporting to make sure that the lending through these programs is also going to minority-owned, women-owned businesses, and that sort of thing. So we're hoping that they listen to that and we have better metrics on it to make sure that people are getting an equitable shake at this sort of funding. And we also saw that from reports last week as to where the loans were going, even though California received the most total dollars in PPP loans, it was dead last in the number of loans per small business in the state. Yeah. And that was similar for a number of other coastal states, Washington, Maryland, and some others. And we don't know why that is. And it could have something to do with having more underbanked people in the state, but we need SBA and the Treasury to find out. So we sent another letter to the SBA and Treasury last week with Senator Harris demanding that SBA look into this and figure out why it's happening, because it's a big gap between California and some other states.
Yeah, I appreciate the Senator's leadership on that. Thank you. Xiomara, can you share the manner in which PPP funding was distributed and where there are disparities for smaller businesses?
Yeah, so I think it has already, a couple of us have already referenced it in our initial introductory remarks. So the Paycheck Protection Program or Payroll Protection Program, the PPP program was distributed initially through the SBA 7A approved lenders. So this includes most major banks, some credit unions, community banks, some CDFIs that didn't have that specific SBA approval status did have to apply. And we do know that the SBA did add additional intermediaries. However, that was done, I think the last week before the program and the funds dried out. And so we recognize everyone worked really hard to try to get as many institutions in to be able to also facilitate the loans. But one of the challenges was each financial institution really had their own manner in which they were processing their payroll protection program loans. Some indicated we will first service the needs of our existing clients with commercial loan products with us. Some indicated we'll only service those applications coming from clients that have an online account with us and a business bank account with us prior to this date. So there were several different while the intermediary network was a really good one to be able to leverage, I think one of the challenges, especially for those very small businesses, right, those folks with maybe 5 employees, where they're not going to have a large number of payroll to be able to service a loan of, more than $350,000. And that's, I think, part of the challenge is looking at the data that the SBA has released to date. 70% of the loans that were distributed, 7% of the money was for loans of over $350,000. So again, just looking at the size of that, the revenues of those businesses would have to be at least between $1 to $2 million. And so when we think about that, that kind of locks out some of those smaller companies, but we did connect with a couple of community development financial institutions that were approved to service some SBA products and got their approval to do payroll protection loans in the last week. And they did let us know that they had specifically received guidance from the SBA to process smaller dollar loans to meet the needs of those smaller capital loans. So we heard with one that said, we're only going to be processing loans from $10,000 to $250,000. So again, based on that guidance, they're going to really be meeting those needs of those very smaller businesses with smaller payrolls, which represent really a majority of the businesses that we're talking about. So I think overall, the leveraging the SBA 7A approved network was great. One of the challenges, and I can foresee this kind of continue in this next phase, in this next round, is the SBA had an approved SBA 7A lender list on their website, but as they were adding additional intermediaries, that wasn't necessarily updated. I know a couple of us that are doing outreach have local lists or have, spreadsheets, and there's a couple even regional efforts to try to coordinate and let folks know this bank is servicing non-customer applications, that lender's doing in customer applications, but only through these days and these times, and call this number. And so there's also this loose information networks that I think we're trying to establish via our ecosystem building work. I think here in the LA area, that's been one thing that I have recognized that the Chamber has taken a truly leadership position in being able to say, we're going to be a point of resource and access for business owners that need the timely information, but also can, be connected directly to the institutions locally. And I think that in several different regions, we're seeing similar efforts, in the Bay Area and in San Diego and other parts of the state, where folks are coalescing together, collaborating together to be able to plug folks into the right network.
Thank you, Xiomara. Jennings, we have learned that the underbanked, as we were discussing, small businesses are lacking access to PPP and EIDL. What is the U.S. Chamber advocating for in their next relief bill?
Sure. Well, I mean, that's obviously as was mentioned, there has been obviously a big issue with folks, underbanked, folks that weren't able to get access to PPP. It's also important to note as well that, even independent contractors, sole proprietors, self-employed, they really didn't get a chance, in that first round of PPP because they were made eligible on Friday, April 10th, and then we didn't even receive guidance on how that program was going to be rolled out until I think the following Monday or Tuesday. And then by Wednesday night, Thursday morning, the program was out of money. So there's over 23 million independent contractors as well in the country. So, that's going to be an issue. And now with the new money coming and the fact that the House is going to vote on that shortly, and then that'll be signed, into law either later this evening or tomorrow morning at the latest. That's going to be great for them. Obviously, a lot of independent contractors have been negatively impacted by COVID-19, just as most of every business has. So getting them online and getting them access to PPP dollars is going to be very helpful. I think something that's going to be helpful, and this is something that we pushed for as well, and this kind of goes with the overarching theme in that there's a lot of money that needs to go out and very, few or limited, quite frankly, financial institutions to do it. Even though there are a large number of institutions across the country that are SBA 7 approved, it's just, we're talking hundreds of billions of dollars, obviously, that need to go out through these various institutions. It's a massive transfer of wealth And so expanding the number of institutions, obviously, that can participate in the program has been key for us. And I think something that's really going to help folks that were underbanked is getting fintech companies online. They weren't really eligible to participate in the first round of PPP, but now they're, for the most part, they're set up, and I think that they're going to be pretty well positioned to assist a lot of the smaller businesses that don't have those traditional banking and lending relationships. But if you're a small business and you use Square, you have a relationship with Square, or QuickBooks, Intuit, for example. I mean, these are some of the participating fintech companies that are going to be able to accept PPP loan applications and start dispersing loans. So that, I think, is going to be really helpful and a new avenue that's going to be available to people, quite frankly, that wasn't around before.
Thank you, Jennings. Xiomara, what are your thoughts on the additional policy fixes in regard to reducing the size for eligibility, incentive structure for intermediaries, and establishing CDFI lenders to manage the portfolio of smaller PPP loans?
Yeah, so I think Justin might have made a reference to this earlier. There weren't real significant changes to the Payroll Protection Program in this 3.5 bill. No meaningful measures, at least, beyond the allocation of the $60 billion going through community banks and CDFIs, which I think is also a good step in the right direction to ensure that smaller dollar payroll protection loans are being processed. In terms of the fee structure, I mean, the SBA did initially write that into the law, where the intermediaries that are processing the payroll protection loans, for a loan of under $350,000, the fee there collected by the intermediary is 5%. A loan between $350,000 to $2 million, it was about 3%, and anything over $2 million was 1%. But again, if you think about the underwriting process, the demand of these products, and just ultimately the underwriting process is going to take a lot of work to underwrite 10 loans of $50,000 versus one loan of $2 million. So the cap, again, for these payroll protection programs was set at $10 million. That was the cap, 500 employees or less. We didn't see any changes on those caps necessarily in this last round. And so I think, again, recognizing the mathematics behind how the payroll protection loan calculation is made, it's a monthly average payroll, multiply that by 2.5, that gives you your loan size. So again, there's no way that a small business in this country, we have 92% of all businesses have less than 20 employees. There's no way that they'll ever get to that qualification of $8 million on payroll. And again, in this last round, we saw 4% of the loans go to of the approved loans being of loans of $1 million or more. So over 44%, almost 45% of the money that was approved went to those larger dollar loans. So again, those could be some additional things that we look at in terms of addressing the challenges. I know that there's a recognition that there's already a significant, as Jennings and Justin indicated, this is already a significant, quick way to address the immediate needs of businesses. But nevertheless, in this last round, only 6% of businesses or so were served. We'll expect to see another gap of folks that maybe are not going to be able to come into through this round. And so in terms of some policy fixes, maybe dropping down that number for the cap of the loan, the economic injury disaster loan, for example, that's capped at $2 million. Again, this is for payroll and trying to keep folks on payroll, so it does make sense to increase the cap, but maybe not at the $10 million mark if we're really assessing that smaller micro businesses, mom and pop shops, the local businesses that we go to, that they're also receiving some of these dollars. And so I think the incentive structure was right, 5% for the smaller dollar loans, 1% for those bigger dollar loans. But I think there are still some potential fixes to making sure that that we can address some of these loopholes that we did see.
Thank you, Xiomara. Justin, focusing on our new normal, do you have an opinion on how our region's business and economy will look like in a year or two from now?
I don't think anybody knows the answer to that, because we don't know how the reaction is going to be. You know, if we're going to react to this closely, how long it's going to take to get a vaccine, when, you know, exactly what a return to some sort of normalcy for businesses is going to look like. I think there are a lot of unknowns there, and everybody's guessing.
Yeah.
So, I mean, that's the short answer.
Yeah. I hope you had some type of, you know, way to look ahead. No.
Well, I can certainly talk about some things I think should be in a future legislation, if that would be helpful.
Sure.
Sure. Okay. And, you know, and we've alluded to some of these already, but the Paycheck Protection Program, as we said, it's helped a lot of businesses, has some problems that are not surprising that we need to deal with. And we've talked about some of those, like making sure that everybody has an equal shot at getting money from this program. We're going to presumably add another $310 billion to it shortly here. And there's quite a backlog for it, and we need to improve on some of the distribution that's happened. We also need to make sure that the money's going out the door faster. The money was obligated completely through this program in 14 days, but it took much longer than that. And my understanding is it still has not happened that the businesses who have gotten those loans have actually gotten the funds for it yet. So again, that's the obligation was more on the banker side, the intermediary side. And you have the SBA struggling, I think, with the EIDL program and PPP of trying to get the money out the door, with Treasury helping. That's a different challenge. And excuse me, there continue to be issues with processing the loans. The online portal that SBA has to receive these from banks was not designed to handle nearly this kind of throughput. They're working with Amazon and some other tech companies to try to improve that, to speed that up. And clarification for guidance. I think there's still a few groups that don't know if they're included or want to be included in future legislation that I think will be looked at. I think Jennings mentioned 501c6s. I think a lot of nonprofits that are not included in previous versions of PPP are at least going to be looked at for future ones. Whether that happens or not is an open question. I think related to that, nonprofits being eligible for this, they've been made eligible for a number of these different programs. 501c3s and also 501c17 veterans organizations are eligible for PPP, but they aren't necessarily for some of the Federal Reserve Treasury programs that we really haven't talked about. The CARES Act included $500 billion to help distressed industries. We don't know where a lot of that money is going yet. Less than half of it has been spoken for, but it's going to be run through the Federal Reserve, which has set up these various facilities to support lending to different industries, including a Main Street lending program. And it's not clear, for instance, if nonprofits will be eligible for those, or exactly what size of loans that they'll be dealing with, even though they've announced it. They have not finalized the rules around those different programs now, and those could affect a lot of Los Angeles area businesses depending on how they come out. I think there are, as I mentioned, issues with state and local funding. State governments, local governments are experiencing huge budget shortfalls with lost tax revenue, especially in California, where there's a lot of tourism and hospitality businesses that are very hard hit by this, retail as well. And they don't know what they're going to do to rectify those situations. They have to balance their budgets. So they either need federal aid or they're going to need to drastically cut services, raise taxes, or some combination of actions. There was already $150 billion in the CARES Act, but that only covers extra expenses for the coronavirus. It does not cover revenue losses, which is the biggest share of these budget shortfalls. And it also doesn't apply to local governments with populations under 500,000. So, and I'll also point out that one of the reasons that we had a slow recovery after the 2008-2009 recession is because, unlike after past recessions, there was a cut in state and local government payrolls. Usually we would increase them during recession. Last time we decreased them, and that had some impacts beyond just public sector. So there are a number of bills out there that would increase state and local funding. The senator has signed on to a couple. One that's a Democratic bill that would provide $250 billion for local governments of 500,000 or less people. And there's another one that's about to be introduced, a bipartisan bill, Cassidy and Menendez, that would raise that to 500 billion. So significant aid for state and local governments that would, I think, trickle through to the economy. Workforce development, I think, is certainly an issue for local governments. You have a lot of people out of work now. And in past recessions, what we've done is we've provided a significant bump in funding to workforce agencies to train people while they're out of work, to help them with dislocation, so they can ease back into the workforce or get back in as quickly as possible. Something like that will need to be done, like we did under the Recovery Act in 2009. That's under discussion, I know. And then something we don't necessarily think about a lot related to this, but certainly affects California, is the tariffs. The trade war with China in particular is something we don't think has been very wise. It's hurt a lot of California companies. It's not being paid for by China. It's being paid for by U.S. businesses and households. Households on the average of over $1,000 a year, which is something we don't need. We were able to get the administration to put a 90-day deferral on tariffs for a lot of businesses, including retail, that I think will help. But we're hoping that goes farther in the future. So those are a few things that I think we'd like to see included in future legislation to help the recovery.
Thank you, Justin. Jennings, just really quickly, the U.S. Chamber has a lot of regular interactions with other chambers and business organizations throughout the nation. What are you hearing from chambers are their biggest challenges?
Well, it's a good question. There's a lot of challenges for sure out there that we're seeing across the board for chambers and businesses of all sizes in every community. I should mention too, just kind of going back to the PPP program and this, the new funding, the new round of funding that's coming of $310 billion. Some good news, I think something that'll help anyway, with making sure that more businesses are able to access the PPP money. I saw that the SBA and Treasury were working on additional guidance to make sure that businesses that apply for the PPP actually provide proof that they need that money and that they've been harmed economically, right? Because we saw a number of stories where businesses that actually didn't or weren't harmed by COVID-19 were able to apply and then receive money. So we want to avoid, obviously, situations like that. And so that additional guidance should help a little bit. And then something I think that's important to note is that the $310 billion, while it's a huge amount, obviously, and it's going to be very helpful, as Justin kind of alluded to, the backlog is massive right now. And there are hundreds of thousands of applications that are in the queue waiting to be processed, worth tens of billions of dollars. And so it is very conceivable that this money could also run out pretty quickly. So just I wanted to point that out. And then Congress might have to address this issue again at some point in the near future. Whether that's part of a broader phase 4 package or beforehand, I don't know. I think that remains to be seen, but that's just something that's out there. Other than that, going back to your point, Patricia, and your question on kind of what we're seeing from chambers across the country, it's tough. I mean, I don't have to tell everybody on this call how difficult it is. And you look at the unemployment numbers, the numbers that came in today, right, on the unemployment claims that were issued last week or that were filed last week, 4.4 million. So now we're at 26 million unemployment claims filed in the last 5 weeks. It's a massive number. In the state of California alone, we've seen almost 3 million unemployment claims in the last several weeks. If you're using kind of the baseline of March 1st, the employment numbers of March 1st in the state of California, 16.6% of the workforce from March 1st has filed for unemployment in the state of California alone. Some other states are now at around 20%, including a state like Nevada, which is obviously very hospitality focused. So it's pretty dramatic, right? And pretty traumatic. The pain that we're seeing economically across the board. We've done studies with MetLife, for example. We do kind of a small business survey every quarter on kind of the state of small business, the state of the economy. Up until this obviously most recent quarter had pretty good news, right? For most of last year, I mean, we were seeing a lot of positive momentum, especially for small businesses, a lot of optimism. understandably that's cratered. But then really we did some additional polling a couple of weeks ago, asking folks about kind of, what their status is, how long do they think small businesses, particularly folks between 1 and 99 employees, how long can they continue to operate? And, the numbers were pretty shocking. Within a month or two, if these businesses don't get help, about a quarter of the small businesses with fewer than 100 employees are going to close permanently. Within a 5 to 6 month span, it was about 50%. If they don't get a sufficient amount of help, would be in danger of closing permanently. I mean, the numbers were just absolutely unbelievable. So not good to see that. Chambers are in a world of hurt. We're hearing stories left and right, of chambers that have cut staff, have needed to furlough staff, lay off folks. A lot of chambers are small operations. I mean, they're 1 person, 2 person, maybe 3 person operations. And at a time when businesses are clamoring for information, these chambers just aren't able to they don't have the bandwidth left because they don't have membership dues coming in. They're not able to do events. A lot of chambers are very event heavy and rely on events for their revenue. It's been really bad news, obviously, across the chamber community, but just the business community in general. So a lot of the numbers we're seeing, not good. Hopefully we can get through this. And a lot of our focus moving forward has been certainly on some of the things that Justin mentioned, phase 4, what's that going to look like? What else does Congress need to address? But really, we're kind of starting to shift our focus to reopening the economy, understanding that the economic damage that's been sustained is very severe. We need to try to reverse this, obviously, in a responsible way to where we don't, further facilitate the spreading of the virus. But we need to think about ways that we can get business back up and running when and where it makes sense, and kind of start the discussion and to lay the blueprint really for how we're going to do that. And so we've been working with the White House and Congress on kind of formulating a plan to do that, and talking about some of the regulatory legal liability issues that are going to be out there, certainly for businesses as they begin to open up. But there are all kinds of things: public transit, childcare, I mean, you name it. There are all kinds of issues that absolutely need to be addressed, but we're starting to really think more heavily about that.
Thanks, Jennings. And I'm looking at the time, and it's 2:50. So I had another set of questions about recovery, but I think I'm going to not ask you those questions and maybe get some questions from the audience. So I have a question here from Ted Green. Is it Ted Green? Can you? The question from Ted Green is, assuming the House passes more funding for PPP today, how quickly will banks be able to resume approving the funding loans?
Maybe I could jump in there. There's already a huge backlog of companies that have applied for this. It'll ultimately be up to SBA and Treasury as to when they can start, but I would assume it would be very soon. And we've heard from different banking organizations that all of that money could be obligated, I think as Jennings alluded to, within a few days. Mm-hmm. And then after that, Senator McConnell has indicated that he's not willing to negotiate another package until the Senate is back in session, which would be May 4th or perhaps later. So what we do in that gap period will be interesting, and what, assuming that the money goes that quickly, something we'll be watching closely.
This is Kumar. I can also just quickly to chime in. We're also hearing from a lot of financial institutions that have been receiving applications during this period, because the SBA, of course, they are not able to do a backlog of the economic injury disaster loan product, but the payroll protection loans, there have been some intermediaries, fintech companies and others that have already a backlog. And so we don't have any numbers from some of these intermediaries, but it could be, there are some things that folks can be doing if they haven't applied already. And that's one thing that I would definitely encourage them, is to reach out to a technical assistance center, Big Soul Exchange, Chamber's doing some great technical assistance work as well to help package their loan if they haven't already submitted something.
Okay.
Next message is from Megan, who I just unmuted.
Okay.
Hi, can you hear me?
Yes.
Okay, we've been offered loan documents, but the repayment is set to start in 6 months. with the repayment over the following 18 months. With the unknown economic state we're in, we'd be in big trouble if we don't end up fully qualifying for the forgiveness. What's the timeline for spending the PPP loan money on payroll? It seems intended to be spent within 2.5 months. Currently, we don't have 40 hours worth of work for all of our employees. So we would be bringing back full-time staff to sit idle just to spend this loan money if there's a time crunch like that. Is there any guidance available on that?
Yes, and if you, there's more information on our website. If you go there to feinstein.senate.gov, there's a red banner page that lists all the different COVID resources. But basically, it's 2.5 months determines how much of the size of the loan that you can get. It's based on 250% of your monthly expenses. The amount that you get needs to be spent for 8 weeks of payroll. Right. And the whole idea is that you, even if you don't have things for people to do, the idea was instead of paying people unemployment insurance for that time, that you would not have to lay people off and you could keep that employer-employee relationship and pay them that way instead. So it was viewed as a better way for a lot of businesses to pay that.
Does that answer your question?
Yeah, it still puts us in quite a pinch because then we'll have people sitting somewhat idle for those 8 weeks. You know, we're on the early side of getting this loan. It's almost better for us to turn it down and wait a few weeks to get offered in the next round because we don't have enough customers, you know, asking us to do work for them at this time.
Well, again, they don't have to be doing work. I mean,
Yeah.
as a public health issue, we want people staying at home. So it's just a question of how you get money to people. And this is one of the ways that it was thought would fit a lot of small businesses, and I think does.
So it's more to ease the unemployment system than it is to actually get us up and running, is what I'm hearing.
It covers a lot of the same ground that unemployment insurance does, but it also means that you don't have to lay people off. So for a lot of businesses, that helps that they don't have to lay people off who may take a different job later, and it makes it easier to get back up and running because you still have the relationship with those employees.
Okay.
Thank you, Justin.
Thank you so much. So the 8-week cap is fixed. Yeah.
Thank you,
Right.
Megan, for your question.
Okay.
We're going to move on to the next question.
1 second, let me unmute, and that is Maud Winchester.
Oh, hi. First of all, thank you. It's so reassuring to hear from all of you, not feel alone. I'm wondering if any of the three of you could advocate for this idea, which is that Governor Newsom did a great job of doing a call for all retired medical professionals to get back to work during the pandemic. And I'm wondering, would it be possible to do a call from someone high up asking all retired mortgage bankers to jump back into the fray and try and relieve this backlog? So I guess it's a suggestion and also a question. Do you think it's worth pursuing, and would you advocate for it? Thank you.
Thanks, Maud. Yeah, I mean, I think you're right. I think, you know, everyone's discussing the backlog that there is. So there's definitely a need and a demand to get, you know, these applications processed. So it's definitely, we can explore that further. I think they would probably require some partnerships with other partners to explore this opportunity with any of our elected leaders in Washington or in the state level.
And if I could just say something, you know, there were written into the payroll protection programs, you could work with a broker, and a broker or an agent could also help collect the paperwork, package the loan, and get that fee directly from the financial institution. So, and I know many banks that did, you know, have folks coming in at all kinds of crazy hours, working on the weekends and making sure that they were processing. So I'm not necessarily sure that it's just a shortfall on bankers necessarily. I definitely think, you know, the fintech companies are going to add that capacity, I think, as well. I think Jennings mentioned that. They're able to, you know, leverage technology to be able to process a lot of this. They're collecting a lot of the loan documents on the front end. some of the community banks, for example, that we heard from, were processing some of the basic information and then collecting loan docs at the end of the underwriting process once they received an SBA approved number. And so that adds another step. And so, but the fintech companies, I know that there's really, you know, good technology that's also helping push these out and process these to folks, again, that maybe don't have these banking relationships or don't have access to, you know, transport to get to the bank or to call their broker online or or an internet service for example. So I think that there is, you know, some workaround. I definitely think, you know, it is an all hands on deck situation. I know a couple of credit unions that did bring additional folks just to help process these for members of their community. And so definitely, I mean, that's been something nice to see that folks are coming together.
I like the creativity of the idea, and I think it could help on the margins, but I think the big bottleneck right now is with the SBA, and that's where it's really slowed down.
Mm-hmm.
Thank you. I think we have maybe time for just one more question.
Okay,
Diana?
Monisha, go ahead.
Yeah,
Monisha had a question.
Yeah, hi. My name is Monisha Coelho. I had a quick question. We are getting a lot of calls from the smaller hotel owners, restaurant owners and other businesses that are required to stay closed during the emergency. What is the best way for them to use the PPP loans, even though the business is required to stay closed, and how can they retain and pay those employees?
So one thing that, so again, I think Justin mentioned this. So the purpose of the Payroll Protection Program is to ensure that folks are staying employed. And so whether you have stuff for your employees to do or not, the point is for them to be able to still be on payroll. Now, for you to be able to qualify for the full loan forgiveness, at least 75% of your loan needs to be spent on your payroll. 25% can be spent on these utilities, rent, you know, there's a couple of other categories that you can spend that down on. I think one challenge that we're starting to see is folks that have, in the restaurant industry, is that folks that have received the Payroll Protection Program loan are starting to reach out to their staff that was furloughed, but they're now on unemployment, and it's hard to get them to come back on. So I think that that's a challenge that may pose a challenge, and we'd love to get some clarity from the SBA on, you know, the forgiveness feature and what documentation they will be also requiring to fully look at headcount and all of that. But in terms of, you know, retaining and paying your employees, whether the business is closed, I think that was part of the intent of the program. And feel free to chime in here, guys.
And I'll just add briefly, you mentioned exactly right that 75% or more has to be spent on payroll, but that was not in the CARES Act. That was SBA's interpretation of the CARES Act. So they added that in there. And it makes sense from a general point of view because that's what the program was intended for, but there are situations, and restaurants is one of them, where it's more difficult to meet that goal. And so that may be something SBA needs to be looking at.
Okay, thank you. I'm looking at the time, it's 3:01. So I want to thank everyone for joining us today. I think it was a great discussion on some very key policy issues. So thank you again for joining us. I would like to thank Justin, Siamara, and Jennings for sharing their wealth of knowledge on the CARES Act and their insightful policy recommendations. Thank you to all those that asked questions. I hope this was very informative and productive. Thank you very much. Bye-bye.
Thank you.